There has never been a more hopeless time in history to be a first home buyer or renter in Australia. Let me explain. The cost of the home is the highest it's ever been, with the average home in the capital city costing just under $1 million. House prices have almost doubled in just 10 years, and this year alone, house prices have broken a new record every single month. Interest rates are at a 12-year high, making home loans more expensive and significantly reducing what a first home buyer can borrow. Rental affordability is the worst it's ever been. The number of houses being built is at a 10-year low. And to top it all off, the country's supposedly headed towards a recession. Mix it all up and you're left with what I call a complete train wreck that has just about crushed the homeownership dreams of Australia's youth. So how exactly did Australia find itself in this hot mess? And what is it doing about it to get itself out? Let's find out. The truth is that Australia's housing crisis has been brewing for a very long time. Although it got particularly bad following the COVID-19 pandemic, the housing market was broken well before it. Over the past 30 years, house prices have been increasing at a rate that far exceeds the growth of Australians' incomes, making homes more and more unaffordable. To understand how Australia has found itself in the worst housing crisis in its history, let's quickly familiarise ourselves with the basic economic principles of supply and demand. Simply put, supply is the total amount of a product that is available for us, the consumers, to buy. Whereas demand is how badly we want to buy something and what we will pay to get it. When a product is in low supply but has sky-high demand, the price of that product usually increases. This is known as scarcity, and scarcity is exactly what's been happening with Australia's housing for decades. So, with that knowledge in mind, let's look at the long-term issues impacting the supply and demand for Australia's housing, and why it's making homes more unaffordable than ever. For decades, Australia has been building new homes well below its population growth. Outside of the first 2 years of the pandemic, when Australian borders were closed, there has not been a single year over the last 2 decades where housing supply has exceeded population growth. And while you wouldn't expect a new home being built for every new person, the shortage of home compared to the growth in population has consistently been in the hundreds of thousands, meaning the issue of the housing undersupply only gets worse year after year, which is why Australia was ranked 22nd out of 33 OECD countries for providing housing supply relative to its population. Surely the solution is obvious, right? Just build more homes. So why hasn't Australia been doing just that? 2 simple reasons: money and classic government red tape. Firstly, building a house isn't very cheap. Outside of the very limited public housing, which has actually decreased over time, Australia housing isn't funded by the government. Instead, Australia is reliant on the private sector to build homes, something developers will only do if there's going to be a nice profit on the other side. So when you factor in continuously rising material and labour costs, the incentive to build homes at record speed just isn't there. In fact, there's greater incentive for developers to build less homes. The less homes built means less supply on the market, which means a nice fat premium on each home that is built and sold. This is a common tactic used by brands to create artificial demands for their products, and what is known as artificial scarcity. But developers aren't solely to blame. At least they're the ones building homes. To build homes, developers need land to build on, something owned by state governments. They also need planning, zoning, and various other approvals from local councils to build in their area. If classic government red tape making this process complicated wasn't enough, local residents who actively oppose mid to large scale developments in the area don't help either. We're not just speaking about 1 or 2 individuals here. This is an Australian cultural phenomenon, to the point these individuals have gotten their own nicknames: NIMBYs, also known as not in my backyarders. A former central bank economist found that the complex development approval process for builders and the fight put up from NIMBYs has gotten in the way of 1.3 million homes being built over the past 20 years, which, ironically, is roughly the same number of homes the government wants desperately built over the next 5 years to address Australia's current housing crisis. Clearly, Australian housing has been dealing with the supply issue for some time, but what about the demand side of the equation? Unlike supply, demand is a little harder to track, but there's got to be something that explains why no matter how high house prices continue to grow, there's always a buyer around the corner willing to pay top dollar. Now, there's the obvious reasons, like people always needing a place to live and the great Australian dream of owning a nice home on a big block of land which has had every Australian in a chokehold since they were born. But they aren't the only reasons. One of the big drivers of the resilient demand for Australian housing is the favourable tax treatment of owning housing as an investment. Quick history recap. It's the year 1936 and negative gearing is introduced in an attempt to encourage investment into housing supply. Negative gearing allows an individual to deduct any losses associated with owning an investment property against their total taxable income, reducing their tax burden. The never-ending controversy around the impacts of negative gearing on house prices saw it abolished in 1985. Only for it to return 2 years later. However, with its return also came the capital gains tax. This is a tax on the profits made when selling an investment, meaning if you bought an investment property for $1 million and sold it for $2 million, you'd have to pay tax on that $1 million profit. Problem is that the Howard government in 1999 introduced a 50% discount on any capital gain made on the sale of an asset held for longer than a year. For property investors, this was nirvana. While their investment property is being rented out, any losses they incur can be used to reduce their tax burden thanks to negative gearing. Then, after a long while of their property appreciating in value, investors get to cash out by selling and only paying tax on only half of their profit. It's a win-win. And while these tax benefits are not the cause of the housing crisis in isolation, they have contributed to making Australian housing a very popular, profitable, and almost foolproof investment for decades, rather than what housing should be, a human right. Which is probably why 1 in 6 Australian taxpayers own at least one investment property. And while Aussie house prices have always been on the upswing, none of it could even begin to compare to the chaotic price growth that occurred during the COVID-19 years, a point in time that will crush the dream of just about every non-wealthy young Australian's dream of ever owning a home. With the global pandemic bringing the world to a halt, Australia's central bank reduced the cash rate to as close as 0% as one could get to stop the economy from crashing. For first home buyers and property investors, this would mean being able to access a home loan with interest rates of less than 2%, not only providing access to cheap debt, but also bumping up the amount they could borrow from the bank. Supplement this with government cash outs, wage subsidies, and letting individuals raid their superannuation funds, and you get Aussies more cashed up than ever before. And with the fear and travel restrictions brought about with the pandemic, homeowners stayed put, and the number of properties available for sale hit a record low. So with demand at its peak and supply at its lowest, house prices jumped by about 23% nationwide in 2021 alone. Meaning that by December of 2021, the median price for a home in Aussie's capital cities would cost an extra $150,000 than it would have if you had bought in January of the same year. An amount that far exceeds what the average Aussie can save. Surely their ridiculous growth would come to a screeching halt once the government started to wind down their COVID-19 financial relief, and Australia's central bank started raising the cash rate from 2022. Unfortunately, not quite. From a measly 0.1%, the central bank would continue to raise the cash rate until it hit its 12-year high of 4.35% in November 2023, more than tripling the interest rate of a home loan from around 2% to over 6%. And while house prices took a small dip in 2022, momentum would return in 2023 and prices would rise almost 10%, despite how much more expensive home loans had become and how much less new buyers could borrow. And now, 4 years since the pandemic began, house prices have risen 40% nationally, with 3 of Australia's capital cities rising between 50% to 65%. Fantastic if you were already a homeowner, completely heartbreaking if you weren't. And it's not any better for renters, who have been dealing with record low vacancy rates and rents that have increased by at least a third since the pandemic began. Which begs the question, with all the cheap debt and cash from the pandemic wound up, why are Australian house prices continuing to boom with no end in sight? Well, I hope you've remembered what I've taught about supply and demand. Because every single supply and demand issue that Australian housing has faced over the decades has gotten so much worse thanks to the pandemic. On the supply side, properties available for sale are still incredibly low and nowhere near the norm experienced prior to the pandemic. This may be driven by fear that while homeowners can sell for a record price, they'll have to compete in a highly competitive market and pay top dollar for another home. With Australia's borders also opening back up post the pandemic, migration has hit record highs, causing an even larger shortage of new homes being built compared to Australia's population growth. In 2023, this gap was close to just under 500,000. Speaking about homes being built, housing is more expensive than ever to build. With material shortages and just everything being so much more expensive thanks to inflation, thousands of home builders and construction companies have been going bankrupt at record speed. For some, this has left new home buyers with half-built homes that are unusable. Those are some grim anecdotes about the supply issue, but sadly, the demand side of the equation is not any better. Demand for Australian housing hasn't gone anywhere because people can still afford homes, just not first home buyers. With the large increase in the value of assets seen throughout the pandemic, property and share investors are even wealthier. Couple this with wealthy migrants and boomers looking to downsize, and it results in more than 1 in 4 homes in Australia's largest 3 states being bought in cold, hard cash. Interest rates could be 10 times higher for all these buyers could care, but it wouldn't make a difference when they're not relying on debt to buy homes. Likewise, thanks to the property boom, being able to charge record high rents, and the tax incentives I spoke to earlier, property investors aren't going anywhere. Currently, they make up over 1/3 of new home loan commitments, which is twice as many first home buyers out in the market. And for buyers who have been priced out of Australia's largest city of Sydney, where the median house price is over $1 million, they're simply looking elsewhere to buy. This is driving insane price booms in other capital cities that have historically been known to have been affordable, like Perth, Adelaide, and Brisbane, causing more and more people to be completely priced out of ever owning a home, no matter where they look. And while it hasn't happened just yet, it's only a matter of time before the central bank starts to cut interest rates, which has already happened overseas in places like Canada, Europe, and New Zealand. This will make home loans a bit more affordable and increase a buyer's borrowing capacity, yet another reason for house prices to keep going up. So, what is Australia actually doing about the mess that it's found itself in? To be frank, not much. To tackle the supply issue, the federal government has set out what they themselves call an aspirational goal of building 1.2 million homes over the next 5 years. To get there, they've established a $10 billion housing fund. Too bad this money will only fund 40,000 new affordable homes over the same time frame. This leaves a shortfall of about 1,160,000 homes compared to their own target. To fill this gap, the government is calling on state governments to release land and on the private sector to build and fund, which doesn't really fill one with much confidence that this aspirational target will be achieved. And while the fund isn't the only investment into housing, there's not much else linked to tangible outcomes for housing supply. Other initiatives, like the First Home Guarantee Scheme, helps first home buyers buy their first place with as little a deposit as possible. While this is great to get people into the market, it does nothing to address the already sky-high demand for housing. If anything, it further contributes to it. Sadly, not much else is on offer, and it's not a surprise. Policies to tackle housing demand have been quickly shot down by none other than the Australian people. Back in 2019, the Labor Party proposed to scrap negative gearing and reduce the capital gains tax discount, but then lost what was meant to be an unlosable election. And although Labor is back in power, they don't seem interested in revisiting their old policies. So, is Australia doomed? Kind of, but there is a glimmer of hope. Australia's second most populated city of Melbourne has been a bit of an enigma, with house prices remaining mostly flat year on year, while house prices surge all across the country. So, what makes Melbourne so special? It's simple. Their state government tackled housing demand with taxes and legislation. By increasing land tax for investment properties and reforming the rights of renters, property investors are supposedly fleeing the city in droves, which is probably why Melbourne is seeing the highest ratio of first home buyers entering the housing market in the country. Stagnant house prices and more first home buyers securing a home, it's like a dream come true. What's happening in Melbourne shows what targeted legislation at reducing housing demand can achieve for housing affordability. Combine that with continued efforts to build more homes, and you might have found a way out of this mess. And although it's unlikely the insane house price growth of the past 2 decades will ever be reversed, it doesn't need to keep getting worse. And it's on us, the people, to voice our support for policies that address the basics of the crisis, the demand and supply for housing. So, there you have it. If you've made it this far, please accept my thanks for watching. And if you'd like more, it'd mean the world if you subscribe to my channel. But more importantly, I'd like to know what your experiences have been in the housing market. If you're an unlucky first home buyer spending every weekend at open homes and auctions, how's that been going? And if you're watching this from outside Australia, I'd love to know what's happening with the housing market in your country. If there's a miracle solution that's worked where you are, let me know in the comments. Thank you.